Super investors are investors with over $100 million in assets under management, and fortunately for us, the government actually requires them to reveal all the moves they've been making in their portfolios 4 times a year. This gives us insights into the moves of investors like Warren Buffett, Ray Dalio, Bill Ackman, and Michael Burry. In this video, we're reviewing the top 10 stocks super investors are buying right now in 2025 from their latest filings. Together, these companies are worth more than $13 trillion, and we're saving the biggest buys until the end. Now let's dive right in. The first stock on our list and the 10th biggest super investor buy was Starbucks. 9 super investors own the international retail and coffee giant, and 5 of them added to it in the last quarter. Starbucks stock has made a big run-up from its lows in July of 2024 to where it's at now. Currently, it's a $128 billion market cap that's just at its 52-week high. Compared to where it's traded in the past, Starbucks is below their historical sales, but they're out above their free cash flows and their earnings. GF value comes in for the company at $99 per share, which is down $12 and 13% from their current prices. The next stock number 9, is United Healthcare Group, ticker symbol UNH. 17 super investors own this company, and that's led by the Sequoia Fund and David Rolfe of Wedgewood Partners. This was pretty mixed, with super investors buying and selling the stock in the last quarter. United Healthcare is the largest health insurance company in the United States. It's a $482 billion market cap that's down $100 from its 52-week high, right in the middle of that 52-week range. The stock is priced right at its historical sales and their DCF based on their cash flows, yet they are trading below that on an earnings basis. The company's stock is down 16% from their $622 GF value, signaling that this may be slightly undervalued. Stock number 8 is Taiwan Semiconductor Manufacturing, TSMC, trading under ticker symbol TSM. It's now a $1 trillion business that's down $20 from its 52-week high. Warren Buffett actually bought this company back in October of 2022 and then sold out the following quarter. Since then, it's up more than 3 times, so he lost out on a lot of money. TSMC is the world's largest dedicated chip foundry with over 60% market share. TSMC is owned by 13 different super investors, and this again is led by David Rolfe, Stephen Mandel, and Sequoia Fund. Based on their current multiples, the stock's well ahead of where they've traded in the past historically, and you want to remember that semiconductors are a cyclical market. They're also priced above a Peter Lynch value and well above their cash flows. While there's a ton of future growth still being priced into this business, right now they're trading 28% higher from their GF value, which is $159 per share. You can support Global Value by clicking the first link in the description to check out Interactive Brokers, our affiliate. Their brokerage services has tons of great tools for investors that you can take advantage of. Plus, it helps make videos like this one possible. Now let's keep looking at our list. The 7th stock on our list is Flutter Entertainment PLC, ticker symbol FLUT. It's a $42 billion market cap that's the owner of FanDuel and other betting services in the United Kingdom, and it's trading at its 52-week high. 8 different super investors own Flutter, led by Tom Bancroft, who was involved in running the Geico portfolio over at Berkshire Hathaway. With the recent increase in their stock price, Flutter's trading 21% higher than their $247 GF value. Stock number 6 is CoStar Group, the leading provider of commercial real estate data in the US and the owner of LoopNet, Apartments.com, and BizBuySell. Today, it's a $30 billion market cap that's up just $5 from its 52-week low. Super investors like Dennis Hong, Chuck Akre, and Wally Weitz all added to it in the last quarter, and 7 of them own it overall. CoStar trades below its historical sales multiples, yet they're up from their cash flows or their earnings. Still, with steady future growth being assumed for the business, their GF value comes in at $94.50 per share. That's up 22% and $20 from their current stock price. Now we're into the top 5 super investor biggest buys, and we're getting into some controversial territory with our next stock. CVS Health is the $83 billion retail pharmacy and healthcare giant that's now trading in the middle of its 52-week range. This stock in the last couple of months is up more than 50% from their lows. 8 super investors own CVS, and this is led by a new 8% position from Prem Watsa of Fairfax Financial. He's been called the Warren Buffett of Canada and runs a similar business and investment portfolio. Even with this big increase in their stock price, CVS trades very attractively compared to their historical sales, and they're way below their cash flows. Despite bumps in the road and some headwinds for this business, they're still priced as being moderately undervalued with a GF value of $83 per share, which is up 21% from their stock price. Stock number 4 has been taking both the US and China by storm in the past few years. This is Pinduoduo, PDD Holdings, trading under ticker symbol PDD. The $172 billion company owns the namesake app and Temu in the United States and is in the middle of its 52-week range. The super investors in the stock are fascinating. 7 of them own it, and it's a new 10% position from Michael Burry. David Tepper, a recent huge China bull, also has an 8% holding. And Norbert Liu, who's been called a modern Charlie Munger, has 4% of his portfolio invested in the stock. Despite some of this, the company's still trading above their projected cash flows or their gram number, albeit these are very conservative methods of valuing the company. They're trading at less than half their historical sales, they have a PE of only 12, and they're just trading for 10 times their free cash flows. While this is a very fast-growing business with questions about a more sustainable business model and less track record to go off of, the company is 38% below their GF value of $200 per share today. That's good enough for a significantly undervalued rating. Stock number 3 on our list seems to be the old reliable, and this is Warren Buffett's company, Berkshire Hathaway. Today, it's over a $1 trillion market cap, and it's down $15 from their all-time highs. Berkshire's Class B shares are owned by 19 super investors, with double-digit percentages of their portfolios owned by Guy Spear, Bill and Melinda Gates, Chris Bloomstrand, and Lee Lu. Of course, Warren Buffett's Berkshire's leading shareholder. The company's unified numbers may not always give us the best story behind this business. However, today they are trading below their gram number, yet they're priced above their historical sales by about $50. Buffett's track record of share buybacks can give us an insight into his thought process in valuing the company. Recently, these buybacks have stopped, and because of a purchase of Berkshire Hathaway Energy, Berkshire has actually issued shares in the most recent quarter. The second stock on our list may be a company you haven't heard of before. This is Ferguson, the largest plumbing distributor and second largest HVAC distributor in the United States. Ferguson's a $37 billion market cap that sold overseas holdings and now is focused exclusively on North America. Today, it trades just $15 above their 52-week low. 8 super investors own this stock, and this was a big 6% buy from Seth Klarman, one of just a handful of investors Warren Buffett said he would trust to run his own money. Ferguson, though, looks like it's priced right at about its earnings potential, and they're out ahead of their current cash flows. That's good enough to say that the business may trade slightly ahead of, but pretty close to its fair value. A GF value comes in at $168 per share, and it looks like analysts are expecting this company to keep growing in the future. Now, the top stock on our list is a household name, and it's one of the largest companies in the world. This is Microsoft, ticker symbol MSFT. The $3 trillion giant has shockingly underperformed the market in the last year and is just $20 above their 52-week low. Microsoft is the #1 owned super investor stock, and it was what they were buying most of in the last quarter. 33 of them own this, and no surprise it's led by the Bill and Melinda Gates Foundation Trust, making up 29% of their portfolio. Microsoft stock has been a long-term compounder both as its business performance has soared and as the company now trades at all-time high multiples. Priced at more than 11 times sales, the company's well ahead of where this is at historically. They're also trading beyond a DCF based on their earnings and way beyond their cash flows. The market, however, recognizes Microsoft as one of the world's most dominant companies with one of the deepest and widest moats. A GF value comes in at $429 per share, and it looks like Microsoft's trading slightly below that fair range. Let me know if you want to see a future video on any of these businesses. Remember, you can support the channel by clicking the first link in the description.